Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you. I hope you guys have some wonderful upcoming plans. We got some beautiful weather here in Southern California here. Um, hey, we do got a few economic news releases scheduled for today, and let's jump right into it. But first, also stay tuned to the very end as I'll be giving out a little tip on reverse mortgages that you might find useful. First, the economic calendar, we got the big news today. We got the non-farm payrolls that the Bureau of Labor Statistics provide us for the month of February. So 239,000 jobs were created back in January, and the forecast is supposed to be within that range at 238. And it popped up all the way to 295,000. So a really good number right there that and it caught everybody by surprise with that number. Unemployment rate, month of February, we had a 5.7 back in January. I figured it would go down one tick and actually jump down all the way down to 5.5. So this is kind of surprising, especially after the month of February, where we've been seeing weekly jobless claims jumping up over 300,000, and then now since the new jobs created. So it's kind of a little strange there. But anyways, let's go on here. We got our average hourly earnings for the month of February. We had back in January, we had a 0.5% increase in average hourly earnings. We had for the month of February, it was supposed to go up 0.2 and only went up 0.1. So a little disconcerting that it's not going upwards. And this is something we want to watch because inflation is very low right now, and the Fed has even kind of been on record saying that they want to see wage inflation going upwards. I just saw a stat earlier today saying that 60% of Americans are making on hourly wage making less today in 2014 than they did back in 2007. So, and that kind of shows you how much of a decrease in possible deflation. So they like to see wages going upwards to create more inflationary pressures for us. And right now we're not quite seeing that. So that's something to kind of keep our eyes and ears open for. Trade deficit. We had a deficit of 45.6 billion. Excuse me. Let me get that out. A little bit of a mouthful. Back in December, and because the dollar's been getting so much stronger, and then gasoline price came in exporting. We came in at 41.8. Not as good as the forecast, but came in there. So good news on obviously the job numbers there, which is good news. So why is stock market down? We're down on the Dow's down over 200 right now. Because good news right now is bad news. That primarily means that investors are fearing that the Fed may be on target to go ahead and start raising rates maybe in June sooner than they figured later type of thing. So this is just providing good economic data, which initially, they always like the free handouts. So this means that their free handouts may be coming to an end here very shortly. So this is why the stock market's reacting a bit negative. Also, the bond market's acting a bit negative too. We had a big drop in bond prices today, so it's creating a higher interest rates for today. So hang in there. But today so far the rates, where the bond market pulled out. So some of this is also kind of going into treasuries, and they're kind of, even more conservative, which would be treasuries, the 10-year treasury. As you see that going up right now, that's up about 2.25 range. So that's been kind of nice. But anyways, so right now rates have kind of crept up a little bit from yesterday's to today's pricing. So hopefully we'll see what we get next week here. As onwards, regards to the tip for reverse mortgages. Hey, here's something to keep in mind for if you're looking for trying to figure out what you could possibly qualify in terms of after you sell your house and you want to use reverse mortgages, what you could qualify on a purchase level. This basically you could use the rule of as long as it's within a sales price of $625,000, you could factor whatever your down payment would be. You could double that for qualification purposes. So let's say, for example, a couple had sold their home, have $200,000 after the sale of the profits, net $200,000. Want to use that $200,000 and put down on the next property. They could basically qualify for $400,000. Basically, you could easily say. So keep that in mind next time. This is great for realtors, great for people who are looking to buy their next home and use reverse mortgages. The reason we're kind of using this is that I saw another recent stat recently. About 47% of people who are qualified for reverse mortgages that are selling their home, they're not downsizing, they're actually going upwards. They're moving up again. So keep that in mind. All right. So you folks have a wonderful weekend. Hope you guys enjoy yourselves, and thanks so much for watching. We'll look forward to see you guys on Monday. Take care.